Okay, well, we have Prakash Diwan now joining us. The STX Nifty is down about 32 points. Prakash, hi, good morning. Thanks a lot for joining us. Prakash, I wanted your thoughts first on a couple of these tier 2 banks where we're starting to see a big move. City Union Bank stands out, Federal Bank. Any thoughts here, and what would be your preferred pick?
Good morning, Anuj. So, yes, we've spoken about this in the recent past, where this entire banking sector seems to be kind of getting into a little bit of a re-rating for two reasons. One is, all the bad loans issues that they had and the provisioning that was taking away a lot of the mojo from the P&Ls for some of these smaller banks with the balance sheets which are not of scale have started kind of seeing some sort of this thing come back in terms of traction. I'm quite surprised that Q1 actually, we saw some earnings where the traction on the NIM growth has been fairly decent. The volume itself of outstanding loans has grown in a very decent way. And look at how some of them would start. Also giving you the second highlight here is that this basket is something where you will see a lot of M&A getting triggered off very soon, because the government's intention to, the RBI's intention to also consolidate the sector in a way that it gets stronger players to be finally left to grow is something which is an impulse that you always need to kind of be watchful on, positively at least. And you've seen the likes of Karur Vaishya Bank move from 40 to 70 plus in just a span of 2 months. Federal Bank, we spoke after the numbers, it's kind of started showing such trends. Catholic Syrian is also kind of coming back in terms of some of its pockets. So my sense is there is an element of growth, and all of them have found their niches where they could grow without the burden of additional NPAs getting accreted. So that's where the growth is. But the other thing that I want to highlight is that even the likes of IndusInd and some of these largish private sector banks could also start smartening up given the way credit growth is. The M&M financial numbers that we saw on the monthly commentary tell you that there is credit coming back into the system. And then as we get deeper into the festive season and post the monsoon, there will be a lot of activity around some of these pockets. So quite promising. My pick out there, of course, on a steady state basis remains Federal Bank, but I wouldn't be surprised if KVB continues to surprise even further in terms of a re-rating. So that re-rating is underway, but I expect it to kind of still have some legs, at least another 10-15% from here on for the short-term tactical traders. But from a long-term perspective, I would stick to a largest bank and then not add some of these smaller banks at this point.
Okay, so don't add some of the smaller banks. After the run-up, I think it's better to stick with the largest banks. Got that. Prakash, hi, good morning. I wanted your thoughts on some of these defense plays, right? I mean, look at BEL, it's up over 50% this year already. And now, apart from defense orders, they're also getting into non-defense areas, whether it's homeland security, cyber security, so broadening their horizon in that sense. Is there still more to go here?
Good morning, Sonia. Certainly, so BEL will not only be dependent on government-backed orders in the defense play, but its ability to straddle other platforms, other product lines, and then we've seen that with one of these recent announcements, the detection system that they've got into. Now, those are things which we actually have a huge headroom in terms of starting to bring under the Atmanirbhar campaign, and that's something which means there's much more openness to accept products from these kind of companies. So that's what's changed. It's not the technical prowess was missing or was not possible to bring in, but the acceptance of orders getting executed much more easily without too much of timelines getting stretched is what's changing. So I think their entire cycle, the sales cycle itself of BL, if you notice in the two annual reports from 2021 and 22, it's so distinctly different. The commentary is so different that you can make out that things are moving much faster. And as they get into slightly more complex projects, Sonia, the milestone payment system, which let's say a garden shipbuilder does, that's the kind of eventuality which will happen to some of these larger critical suppliers on defense as well. So non-defense is, of course, an optionality. The defense play itself gets deeper and wider. So I don't see any reason. But, the stocks run up so much that you at times wonder whether you're too late to join in, right? So, I mean, if the market gives you a dip, probably, these are things that you want to add on without much of worry in terms of what happens to the global markets.
Okay. We actually, we're going to talk about the specialty chemical space in a bit. We have the management of Aarti Industries joining in. 84% of their revenues comes from specialty chemicals. But before we do that, Prakash, you just want to set the context here from an investor standpoint. How are you looking at many of these companies in the, in the situation where raw material prices are extremely volatile? Most of it is passed through for these companies, but in any case, they've been struggling a bit. Your view here?
So, chemicals and specialty chemicals within that is getting to be a very clear two-segment play. One is, companies that have a lot of dependence in terms of absorption or exports to the European Union. They are the ones that will probably struggle because there's this sudden crash in demand. If you talk to dealers within the chemical space, you'll be surprised to hear that there's nothing in terms of an offtake for the last couple of months, and there doesn't seem to be any change happening there, because if they have shortage of basic stuff like fuel and gas and all, there's no way they can use specialty chemicals to process that, right? So to come up with their end product. So that's a pocket that you need to stay out of very clearly. The other pocket is import substitution, which is booming. I mean, you have so many companies that are the only ones making this and filling the gap, which is happening because there's no imports coming up. So things like ammonia, potash, all these have started kind of taking such a different use of chemicals that go into that value chain, caustic soda, soda ash. So there's a lot that's happening globally from the supply chain reset, and that's where the pocket just gets interesting. And of course, the companies like Aarti, which are so well integrated, will tend to be much more insulated and always deserve a premium. But I wouldn't be surprised the way SRF after its numbers looked a bit tepid, but it's kind of bounced back. It's going to be a fair amount of traction that will continue here. It's not yet over. The China plus is just getting to be China plus and Europe plus. So things are different and very positive for the specialty chemical play.
Okay, positive on the specialty chemical play. In fact, let's take that discussion forward, right? Aarti Industries is in focus after